Have you ever noticed something strange about the way the world works? You study hard, get a high-paying job, and work 60 hours a week, yet you feel like you can't get ahead. Meanwhile, the wealthiest people in the world seem to pay a lower percentage in taxes than the person cleaning their office. Most people think this is a conspiracy or some kind of magic reserved for the elite. They think the rich are cheating the system. But the truth is much simpler. It's not magic, it's math. And more importantly, it's about understanding the rules of the game. In Lesson 4 of Rich Dad, Poor Dad, Robert Kiyosaki reveals that the biggest expense for the middle class isn't their mortgage or their car, it's their taxes. But the rich use a secret weapon to shield their wealth, the corporation. Today, we are decoding how the legal system actually works for those who know the code. We're going to show you why the Robin Hood theory of taxing the rich actually ends up hurting the middle class, and how you can start using the law as a shield rather than a barrier. Welcome back to Soulverse Cinema. Let's look at the books. To understand this lesson, you first have to understand what a corporation actually is. A corporation isn't necessarily a giant skyscraper with a logo on top. At its core, a corporation is just a legal document, a file folder that creates a separate legal entity. Why does this matter? Because of the order in which money is handled. If you are an employee, your financial life follows a very strict, disadvantageous sequence. You earn money. Then the government taxes that money, often before you even see it in your bank account. Finally, you try to spend what is left to pay for your life. You are playing with after-tax dollars. Now look at the rich. They use corporations to flip the script. A corporation earns money. It then spends everything it is legally allowed to spend on business expenses, travel, meals, equipment, insurance, and even certain car expenses. Only after all those expenses are paid does the corporation get taxed on what is left. Think about the power of that. If you're an employee and you buy a laptop for work, you're buying it with money that's already been taxed 20 or 30%. If a corporation buys that same laptop, it's a business expense paid with pre-tax dollars. By the time the government comes for its cut, the corporation has already used that money to grow, operate, and sustain itself. This is how the wealthy stay wealthy. They aren't breaking the law, they are following a different set of rules that were written to encourage business growth. But the benefits of a corporation go beyond just saving money on taxes. It's also about protection. In a world where everyone seems to be looking for someone to sue, being rich on paper as an individual can make you a massive target. Rich Dad taught that the wealthy own nothing but control everything. What does that mean? It means they don't own assets in their own name. They don't own the house, the car, or the stock portfolio personally. Instead, these assets are owned by corporations, trusts, and LLCs. When you mind your own business through a legal entity, you create a corporate veil. If someone sues you personally, your business assets are often protected. If your business faces a setback, your personal home and savings are shielded. The middle class and the poor try to own everything in their own names. They want the prestige of saying, "This is my house." But the rich know that ownership is a liability. Control is where the power lies. By using the law as a shield, they ensure that one bad day or one frivolous lawsuit doesn't wipe out generations of hard work. Understanding the law isn't about being a lawyer. It's about knowing how to protect the empire you're working so hard to build. So, how do you start applying this? You might be thinking, I'm just an employee, I can't do this. But that's the poor dad mindset talking. The action plan begins with education. First, stop trying to do your taxes alone once your income starts to grow. A good CPA, a certified public accountant, is not an expense, they are an investment. A great accountant will save you 5 times what they cost you by finding the legal deductions you didn't even know existed. Second, start looking into tax-advantaged accounts. Whether it's a 401k, an IRA, or a health savings account, these are mini versions of the corporate tax shield that the government allows individuals to use. Third, if you have a side hustle or a small business, which we discussed in the last episode, make sure it is legally structured correctly. Don't just operate as a sole proprietor forever. Look into forming an LLC or an S-Corp. It might cost a few $100s to set up, but the tax savings and legal protection over the next 10 years could be worth hundreds of thousands. The goal is to move your income from the earned income category, which is taxed the highest, into passive or portfolio income, which often enjoys much lower tax rates and more corporate benefits. I want to be very clear. There is a huge difference between tax evasion and tax optimization. Tax evasion is illegal and will land you in jail. Tax optimization is your right and your responsibility as a financially literate person. The rich pay less because they understand the rules of the game. If you want to change your financial reality, you have to stop complaining about the rules and start learning them. If this episode opened your eyes to the power of legal structures, hit that like button. And tell me in the comments, did you know about the Earn Spend Tax secret? Don't forget to subscribe to Soul vs. Cinema. In our next episode, we're going to talk about one of my favorite topics, inventing money. We're going to prove that you don't actually need money to make money. You just need a shift in perspective. The law is a tool. Use it. I'll see you in the next video.